Good morning, everyone. I propose we get started. Welcome to all of you on this webinar on verification of carbon footprints, limited assurance and beyond. Very happy to be here. Very happy to see that so many of you joined this webinar. It again shows that this is a topic of interest, that verification of corporate carbon footprinting is gaining importance. So very happy to be here today. I'm not alone. I'm joined by two guest speakers. Before I let them introduce them, maybe one word about myself and about Carbon+Alt+Delete. So I'm Kenneth, one of the co-founders and CEO of Carbon+Alt+Delete. Carbon+Alt+Delete is a B2B SaaS platform, a carbon accounting software platform that helps companies to calculate their full carbon footprint, scope 1, 2, 3, but then also set a target, set a mitigation plan, and so on. We work exclusively with sustainability consultants, so end companies cannot directly buy our software. We always work with sustainability consultants because we have learned that companies that need to report on their carbon footprint and need to reduce their carbon footprint, they first and foremost need experts, and then only in a second step, they need software in the back to speed up things and make sure everything happens in a compliant way. As said today, I have the pleasure to be joined by Albert-Jan from BDO and by François from SGS, but I let them introduce themselves. Albert-Jan, you want to quickly introduce yourselves and what you do at BDO?
Yeah, thank you, Kenneth. Yeah, my name is Albert-Jan Knol. I'm a partner at ESG Audit and Assurance at BDO Netherlands. I'm responsible for a lot of ESG assurance engagements. In the last couple of months, it was mainly focused on CSRD assurance. I'm also responsible for our ESG audit and assurance team in the Netherlands.
Thank you, Albert-Jan, and great to have you here in the webinar. François?
Good morning, François Ducamp from SGS Belgium. I'm a technical manager for the emission trading accreditation of SGS in Belgium, the Netherlands and Ireland. And next to this activity, I'm also in charge of verifying greenhouse gas footprint on voluntary basis.
Very good. Thank you both for making the time to join me on this webinar. Before we dive into the content, some housekeeping rules. So we're very happy with the big audience. The disadvantage of that is that we have enforced muting on you and switched your camera off by default. So you can follow the webinar in your pajamas. That's all fine. Nevertheless, we invite you to be interactive and to post your questions in the chat. So both the regular chat or the Q&A chat can be used. We do have some time foreseen towards the end of the webinar for your questions, but don't wait until then, because if we see that relevant questions come in, me and the other speakers will try to address them as we go on. If you like someone else's questions, feel free to give it a thumbs up so that we can also see what questions are most relevant. Also feel free to answer and questions that you think you know the answer to. It makes our life easier. And from previous webinars, we know that sometimes in the chat there really pops up certain interaction, which we like a lot. So you're muted, camera switched off, but I invite you to be interactive through the chat. We are kind of lucky because this week there was a research paper published by researchers from MIT, so kind well-known university, on the importance of assurance in carbon accounting. And we have not paid them to do so, so it was really coincidence that they published a paper exactly in the same week as we are organizing this webinar. But that paper illustrates the importance of assurance in carbon footprinting. So what did the researchers do? They had a lot of data on scope 1 emissions. It's only on scope 1 emissions. Data of around 31,000 companies taken from CDP and extended with data that Clarify.ai had. And they looked at all this data. They had a label for companies that had a third-party assurance, and they also had a label for companies that had a science-based target. And they had data for 5 years, I think, from 2016 to 2021. And then based on statistical analysis, they were able to identify that companies with an external assurance on their carbon footprint, scope 1 emissions, had a scope 1 carbon footprint that was 9.5% higher in terms of intensity and 13.7% higher in terms of absolute emissions. So, of course, correlation is not causation, but that indicates that companies that undergo third-party assurance correct more exhaustively and correct, which then result in higher emissions. Even more interesting, I think that's at the bottom of the picture here, is that companies that had set assurance had also a stronger reduction over time in their emissions. So it's not just about being more complete, but it's also about really taking action to reduce your carbon footprint. I think one disclaimer is that companies that go for assurance, which is still mainly voluntary, might be companies that are by nature more committed to climate change. So that might be a slight bias to their study, but I think very interesting research. The link is here on the slides, which we will circulate after the webinar. So I would invite you to have a look at the paper. It's available online, but it clearly illustrates with academic data that assurance in carbon accounting is important. So that's a great, as said, coincidence that we can now use this as an introduction for this webinar. What are we discussing today? 3 things. First, I will give Albert-Jan the floor to discuss assurance within the scope of CSRD. Then I will give the floor to Francois to talk about verification within ISO. And I will end with explaining how we, as a software provider, can help with third-party verification of carbon footprints. But before giving the floor to Albert-Jan, I would like to know who's in the room. So I would invite you to go to this Menti by either scanning the QR code or going to menti.com and then using the code that you see here in the green box. I think Kaya, my colleague, will also put a link in the chat. But for us, it would be interesting to know what your level of experience is with third-party verification. So have you been helping organizations with limited assurance on their carbon footprint, first option, with ISO's verification on their carbon footprint, with both or with none? And if you are not a consultant but working for a specific company, you can answer this question for the situation within your company. So I'll give you a bit of time to scan the code and to answer. And then I'll go here. Well, I see answers are coming in. That's good. I can still wait a couple of seconds. So we have a mixed audience, majority with 0 experience, but more than half of the people do have at least some experience with assurance under ESRS E1 and or ISO. That's great to know. So a balanced audience. So with that, Albert-Jan, happy to give you the floor to say something on third-party assurance under CSRD.
You can see my slides, right?
Yes, yeah. All good.
Yeah, I've been asked to share some insights on limited assurance, the fascinating world of limited assurance. And to give you a sense of what it is, I best summarize maybe in the end what our conclusion is. So if we provide an assurance report, the first paragraph is basically the conclusion we provide. And it encompasses everything what we do. So I will briefly explain each element. And after that, I will also explain the difference between limited and reasonable assurance and the assurance process in more detail. And feel free to ask any questions, of course. The conclusion we provide, it's a negative conclusion because we perform a review. And it is as follows: based on the procedures performed, the assurance evidence obtained, nothing has come to our attention that we believe that the sustainability statements, CSRD reporting, etc., in all materials, in all material aspects prepared in accordance with the ESRS and also includes a statement of the double materiality assessment. And that's very important, but it defines also what we provide assurance on. It could be that you have a CSRD report. It could be that you have a separate carbon accounting report, a climate report. It could be also that we're looking at just KPIs, for example, scope 1, 2, or 3. And in that conclusion and in our report, we also define the subject matter as such. And I already mentioned the scope is also very important. Normally we look at, for example, a year, reporting over a year. It could be that we're looking at multiple years or just a narrow scope, only the climate reporting. What you see is different from last year's. Of course, in the past, we were looking at, for example, criteria based on GHG protocol, maybe on GRI. But the last year, it was mainly focused around the ESRS and the different topic standards based on the CSRD requirements. So the suitable criteria, that's for us essential. Without any criteria, we cannot provide any assurance. That's basically what we're looking at. On the other hand, we also have our own standards. So the assurance standards is also important, which describe the work we as auditors need to perform in limited or in reasonable assurance. In practice, that's the auditing standard ISA 3000. It's good to know that in the Netherlands we have our separate sustainability standard. I think we're one of the few countries in the world who have a separate auditing standards on sustainability information. But overall, the 3000 standard is the standard we will use. And that's also where we define the procedures we need to perform, the approach, the difference between limited and reasonable assurance. And internationally, they're working on a new sustainability standard, the ISA 5000, which will most likely be available in the next years. So that will be the new standard for our work. And it's maybe good to emphasize that whatever we do, we need to have a rational purpose where we provide assurance. So is it for certain stakeholders? You see that some reporting also relating to scope 1, 2, 3 might have a specific stakeholder group. It could be that investors are interested in this, maybe some clients of companies. It needs to have a rational purpose why we provide assurance. It could be part of your annual report, etc. And in the end, it all ends up in our assurance report, which is being published together with the report of the company. And as I said, it is a difference what type of assurance we provide. So if it's limited assurance, we perform a review. If it's reasonable assurance, it looks more towards a financial statement audit. It's much broader. Limited assurance results in a negative conclusion. Reasonable assurance results in a positive conclusion. And without, and this I think also important for the audience, we need to have assurance evidence, so documentation, information, data, etc., to provide assurance. And we will test, we will review this information to see if it aligns with the criteria, to see if it aligns with the methodology, and whether it's calculated, etc., on the proper way. Okay, so in summary, limited assurance is a lighter review compared to reasonable assurance. And in the end, we're having a conclusion that we didn't find anything that suggests that the reported information is incorrect. I will go to the next slide on the difference between limited assurance. What you see is, and this is also a bit of a challenge for the auditors, I have to be honest, limited assurance is everything between no assurance and reasonable assurance. And reasonable assurance, a lot of auditors are used to that because we perform financial statement auditors for quite some time. audits for quite some times. But limited assurance, it's different. It's very risk focused. It uses a lot of our professional judgment, and therefore it can be different per engagement. And sometimes we don't see any risks in certain reporting. If there are no complex calculations, if there are no estimates, our work in general could be less detailed, less extensive. If there is a lot of complex information, if there is remuneration targets for certain KPIs, all kinds of complexities, maybe some stakeholders have a particular view on the information. That can lead to more work, and therefore we use our professional judgment to assess what kind of work we will do. But if I show you the difference between limited assurance and reasonable assurance, basically limited assurance is a lot of getting an understanding. We perform interviews, inquiries in certain processes. The reporting processes that would lead to a report or to a calculation. We don't rely on the effectiveness of internal controls. We don't test effectiveness internal controls unless it may be more efficient. That's something we would do for reasonable assurance. We will test systems, we'll look into IGGCs, internal general controls. And another important element of limited assurance is analytical reviews. We will rely on, for example, comparing information to prior year. So if you would look at scope 1, 2, or 3, compare it maybe to last year's or to the base years, and then explain why certain changes have occurred in the information. And based on your risk assessment and your judgment, you would do additional procedures. It could be reconciliation to source documents, could be certain inspection, maybe recalculation of information, but it's less detailed than you would do in an audit. In an audit, you can also go for site visits to actually see how it's measured. You would need to do, for example, controls testing on processes. You would maybe request certain confirmations from external parties. That's much more broader work than in limited assurance. And as I said, the use of estimates that can make our work a bit more complicated because we really need to understand how something is calculated or what their underlying estimates and processes are. If I go to the next slide, here you see everything together and also the role of experts in these processes. I will explain it. As I said, understanding the reporting process is essential to get an understanding of the report and how the report is prepared, what kind of tools you use, who is involved. If you have an advisor working on certain topics as an expert, you really need to understand their role. What kind of expertise do they have? What are they fully responsible for preparing the calculations? Or is there an internal review still present? So thorough understanding is important also for the next phase, so our risk assessment. What you see in a limited assurance engagement, you start with the basics. You need to do more work if you consider something, for example, complex area in calculations of scope 3 emissions, that typically has a higher risk in our approach, where we do more work than low risk areas. Internal controls that could support our work. However, it's part of also the understanding, do you have sufficient internal controls which could lead to or minimize the risk of errors in the end in the report or in the indicators. We will review those processes. For example, if you use tooling, okay, what kind of tooling is this? Is there internal certification on the tooling? Is there a different party involved who is responsible for developing the tool and maintaining the tool? If it's just Excel, then it would lead definitely to a higher risk, because the risk of error in Excel is in general high, and in practice we do still see that a lot. That would lead to more work, because we would expect more errors in the calculations in Excel. Also, the reporting criteria is very important, especially also in an ESRS or a CSRD engagement. There are quite detailed data point requirements. We would see if the reporting is consistent or in compliance with those requirements. Are the disclosures aligned with the processes? Do we have transition plans, etc.? All the requirements. We need to see if that is compliant with the standards. Especially if you also disclose your methodologies, the use of estimates. What you typically see is that companies do not report the whole process, especially where it can get complex, because probably they don't know what kind of estimates they use, and they have to be transparent for the users of the report. And finally, the detailed procedures. So as I said, it could be interviews, it could be reconciliations, maybe some sampling, in case you would go back to invoices, to underlying information in the financial reporting system. But in general, limited assurance is most of the times reconciliation with the source documents, and performing analytical procedures. And the use of experts, as I said, is important in every part of the process. So from an understanding part until you also obtain information often from these experts, and you have to verify if the information you test is in line with the reporting criteria, or the estimates, for example, the use of emissions sources is correctly applied. And then the role of the expert can be very important. This was the short presentation on limited assurance. I hope I avoided a lot of jargon, audit jargon, but I'm happy to see if there are any questions.
Yes, thanks a lot, Albert. And we didn't give you an easy assignment to summarize it in 15 minutes, but thanks a lot. For very interesting. Some questions already came in. I'll just take one. So a lot of the people here in the call, they do carbon footprinting for companies. We all know that in carbon footprinting, you sometimes needs to make assumptions. And for instance, one example was given in the chat that let's say you do a carbon footprint, scope 3, a company buys a certain product from a supplier. That supplier provides a specific emission factor for the material, but the documentation is not great. A company uses that emission factor in its scope 3 carbon footprint. How would you look at it from a limited assurance point of view? Is that an issue? Is that okay? Any guidance on this?
So it's good that we understand how the information is prepared. So the use of external information in this case. It helps that they define already their emission factors they use. So it helps in our understanding. It really depends on the impact as well. So what kind of element in the total scope 3? Normally we do our assessment on the total level. Does it really make an impact, or is it just a small part? We have our own materiality levels. So if it's potentially a higher risk of error above our materiality levels, then we need to do more work. And it could be that we will need to see, okay, what is their substantiation for using that emission factor? is that aligned with what we see in other practices? So it's more still an understanding. I would avoid for limited assurance to really go back and do alternative procedures on those emission factors.
Okay. No, that's clear. That's very clear. With this, I would propose that we move on to the piece of François. We still have some time for questions towards the end, and Albert-Jan, feel free to also directly answer in the chat.
Okay.
With this, François, if you can take over the screen.
Okay.
It's yes, there you are.
Thank you. Here we go. Right, so here are the topics I'm going to cover today. First of all, we are going to see the relevant standard for greenhouse gas emissions, ISO and non-ISO. Then we will focus on the ISO 1464 Part 3 for the following consideration: the key concept on verification, verification process and verification principles, and we will finish with a discussion about the benefits of third-party verification.
Perfect. Maybe
so
François,
here is the list.
François, sorry to interrupt you. Maybe one point also as a context to make it very clear for everyone, and apologies, I haven't mentioned it before. So BDO Netherlands or BDO in other countries can give limited assurance within the framework of CSRD. It's mandated to do so by regulation, right? So that's everything that Albert-Jan was explaining was from that angle. SGS cannot give limited assurance under CSRD, but can give verification or assurance with the ISO standard, right? But please correct me, François, Albert-Jan, if what I'm saying is not nuanced enough. But so we're all talking about assurance, but from a different angle or a different application in practice.
Well, I'm going to talk exclusively about the verification of carbon footprint today. We have ESG services, which I'm not able or prepared to describe for you today, but I have a colleague available who can describe what SGS can do in this framework. But my scope here is only for the greenhouse gas verification, which obviously can be part of ESG framework. Right, so we have different types of standards relevant to carbon footprinting. The first category are the standards which set requirements for the quantification and reporting of the emissions. It can be at the level of an organization. We have ISO 1464 Part 1 and an equivalent in the Greenhouse Gas Protocol. For product or services footprint, there is another ISO standard, which is 1467, and there is also an equivalent in the Greenhouse Gas Protocol. And there is also a new standard, a new ISO standard on carbon neutrality, which is ISO 1468. Then we have standards setting the requirements for the verification process. And the one I'm going to focus on today is the ISO 1464 Part 3, which is the one we use most of the time for greenhouse gas assessments. It's not the only one. There are other, the ISAE 3000 series of standards has already been referred to in the previous presentation, but we usually use the ISO, which is important. One thing important to realize is that this ISO 1464 Part 3 can be used for verification against any of the above listed standard, ISO or not ISO. So the above standards will be the verification criteria. We will see that a bit later. And then the last category of standards are the ones setting requirements for the verifier. We have ISO 1465, which is used for accreditation. And we have ISO 1466, which gives more general requirements for the competence of the verifier. At the start of the verification, we need to set the objective, and the objective, generally speaking, is assessing if a greenhouse gas statement is materially correct and conform to the criteria. So the subject matter of the verification is what we call a greenhouse gas statement. Essentially, it is a greenhouse gas emission report, which can be at the level of an organization or at the level of a product. It can also be a carbon neutrality claim, or it can be something else, as long as it relates to greenhouse gas emissions. We also need to set the scope of the verification. Typically, it includes setting the relevant time period to verify, and also the perimeter of the greenhouse gas quantification, which includes boundaries and emission sources inside the boundaries, and some other technical details about the scope. And then we need to set the verification criteria. As I mentioned, typically we will have one of the greenhouse gas quantification standards, ISO or non-ISO. And we can also have other additional documents used as criteria specific to a sector or specific to a greenhouse gas program. We have two types of engagement defined in the standard, which are verification or validation. A verification is about assessing greenhouse gas emissions for a specific period of time in the past, typically during 1 year for an organization. For example, validation is different because it refers to assurance about future emissions from future activities. It's typically used when there is a project intended to reduce emissions in the future, and assurance is needed about the outcome of those future activities, which can be afterwards confirmed through verification when it's realized, let's say. Also important to state is that certification is not possible in the framework of the ISO 1464 series of standards. Certification is assurance about conformity with the standard, but for greenhouse gas emission, our primary purpose is not about the conformity with the standard. Our primary purpose is to give assurance about the greenhouse gas figure, greenhouse gas emissions, even though there are also conformity consideration taken into account in the assessment. In the previous presentation, there has already been a lot of explanation about the difference between limited and reasonable assurance. Those considerations apply to ISO 1464 Part 3 standard, which allows both to be used. It's a decision by the customer to select either of the options depending on the needs and other, let's say, general context of the verification. The difference is in the degree of confidence. The reasonable assurance needs a more thorough, detailed sampling than the limited assurance, and this is reflected in the wording for the conclusion, as already mentioned, a negative form for limited assurance and a positive form for reasonable assurance. Obviously, the choice between limited and reasonable assurance has an impact on the time requirement and the costs of the verification. Another important concept in verification is the materiality. So our objective is to determine if the greenhouse gas statement is materially correct. So the materiality is a threshold beyond which we consider that there is a risk that a misstatement will impact will be misleading for the intended user. It's usually expressed as a percentage of total emission. It's a decision by the verifier and the customer, usually set as 2%, 5%, or 10%. And the choice depends on the context, intended use, level of assurance, also uncertainty. It would not make sense to set a materiality threshold which is much smaller than the uncertainty of the greenhouse gas quantification. And if the materiality threshold is exceeded, then the conclusion and general conclusion of the verification needs to be negative. Here is an overview of the verification process. First, we have the pre-engagement activities, which is an agreement with the customer about the scope, the level of assurance, the objective, and so on. Then the verification activities need to be planned by the verifier, which is based on a risk analysis. Then verification activities are performed, and it leads to findings and possibly to the need of corrective actions, which might result in a modified version of the original greenhouse gas statement. After those possible corrections, the verification can be completed, which involve an internal independent review inside the verifier organization. And when this is done, we can issue the final verification opinion, which is positive with remarks, or negative. More details about the verification activities. Again, as already mentioned, we need to cover the greenhouse gas figures themselves and also the conformity with the criteria. So those both considerations are applicable throughout the verification process. The verifier needs to check that no emission sources have been omitted. You need to go through the data flow and the monitoring process for, let's say, conformity and also understanding the risk of misstatements. Then the primary data and the secondary data need to be checked. The primary data are, let's say, company specific and supported by invoices, internal measurements, and so on, while secondary data are supported by literature. We also obviously covered the calculation, and very important, we also assess the greenhouse gas report itself, because the standards have very specific requirements about the contents of the greenhouse gas report. If there is not enough context in the greenhouse gas report, it can be considered as misleading for the intended user. As already mentioned, all the verification activities are risk-based, and they involved sampling of data, sampling of evidence. It can include site visits, and depending on the outcome of risk analysis, one or several sites for multi-sites organization. And it can also obviously involve some desktop work, particularly to check the calculations. These 5 principles are defined in the ISO 14064 Part 3 standard, and they apply to verification. So the first one is the impartiality. It's very important to avoid any conflict of interest for the verifier. That's why we never offer for the same scope any assistance combined with verification. Those activities have to be conducted separately by different parties, let's say. our assessments needs always to be based on evidence. We need to give a fair presentation of the results of our assessment, including any limitation or let's say misstatement, which we have to disclose in our verification opinion. We need to keep records of all documents collected during the verification process, and there is also a principle of conservativeness which applies when estimates are used. We need to be on the safe side when there is any uncertainty. And finally, the benefits of the third-party verification. In case of regulated verification, obviously the purpose is to, in the first place, to achieve legal compliance with the legal obligations. In the framework of voluntary verification, there can be different drivers. The first one is to build internal confidence in the data, which is essential when those data are used for decision making, such as setting targets, reduction targets, or making investment to reduce the emissions. Then, very important, third-party verification can increase the external confidence in the greenhouse gas statement, which is obviously very important to preserve the reputation of the company in case the results, the greenhouse gas quantification, are intended to be made public. And if any reduction or carbon neutrality is claimed, it can be very dangerous to issue misleading or incomplete or incorrect information to the public. And finally, some verification might be driven by the demand on the market to have organization or product carbon footprint verified, particularly to access some markets and some call for tenders, for example. So the greenhouse gas assessments are just one pillar of the four pillars we have in the SGS services around sustainability, the other pillars being biodiversity, ESG assurance, and circularity. So if you have questions, feel free to put them in the chat and we will see if we can answer them. Thank you very much for your attention.
Thank you, Francois, for the great presentation. Very, very interesting. Quite a bit of questions in the chat. We don't have time to address all of them. Maybe just one. So you mentioned that for, say, voluntary assurance under ISO, the client or the company can choose for limited or reasonable assurance. Do you have statistics on how many companies go for reasonable versus limited?
No, I can't give any statistics. Would be 50-50. Well, no, I can't really say. Don't really say a percentage. We see both. We definitely see both, depending on the budget, on the size of the organization as well.
And what would you recommend companies that don't have a legal requirement for third-party assurance, but just want to have comfort in their numbers that they communicate externally?
Difficult to say, to recommend either. Yeah, I'd say it's always better to be on the safe side and to go for the thorough, let's say, assessment. But yeah, the budget is limited. The limited assurance can provide already a lot of benefits, I believe. I think for the small size organization, probably the difference for the budget for limited versus reasonable assurance is not that big. If there is just one location, the scope is rather simple. It will probably not make a big deal of difference between both options. While for very large organization with a lot of sites in a lot of countries, it can be more substantial.
Very good. Thanks a lot. Very interesting. You will see in the chat, a lot of people have questions on exactly what to use when and how it works in practice. So I will take the final 10 minutes to say a couple of words on what we do at Carbon+Alt+Delete to facilitate third-party assurance. I already squeezed in some of the questions, so we'll skip the final Q&A. But François, Bertian, feel free to take the time to still answer some questions over the chat. So what do we do at Carbon+Alt+Delete? So we're a software provider, so we're not a carbon consultant. We're for sure not a third-party assurance body, but we're a software provider that supports the full process of carbon accounting from data collection until reporting, and you also see a final step here, auditing. So what do we do in terms of auditing? First, our platform is validated, so not verified, not certified, but validated to be compliant with the Greenhouse Gas Protocol, the corporate standard, and with the ISO standard, the 14064-1, so the one for organizational greenhouse gas emissions. So that basically means that, in this case, this third-party verification body once a year reviews our carbon accounting engine, reviews the reports that we generate to make sure, reviews the emission factor databases that we use to make sure that this is still up to date in line with the corporate standard and the ISO 14064-1. That, of course, doesn't mean that every carbon footprint that you make with Carbon+Alt+Delete is by definition correct, right? Still garbage data in, garbage data out. But the carbon accounting engine is validated by a third party, which speeds up the third-party assurance of carbon footprint calculations, because the calculations themselves don't need to be checked anymore. It's more the completeness and accuracy of the input data that still needs to be validated. To go one level deeper, what do we do to be compliant? So I will not bother you with every detailed point here on the slide, but basically we have implemented all the nitty-gritty details of the greenhouse gas protocol that you need to report on to be in line with the greenhouse gas protocol, which is very important because, for instance, under CSRD, ESRS E1 refers to the greenhouse gas protocol on how to calculate your carbon footprint. So all those nitty-gritty details on life cycle emissions, split per greenhouse gas, radiative forcing, the new upcoming LSRG standard on land-based emissions, we cover it all within our carbon accounting engine. If we then look at the requirements under limited assurance, what you need to do there from the framework of CSRD. So we do use the greenhouse gas protocol. The software is validated. We are very transparent on how the operational boundaries are set, how the organizational boundaries are set, why certain emission activities are included and excluded. I will show you in a minute in the platform, but we're very transparent on what is the activity data, what is the emission factor, what are the source of both, and then, of course, multiplying both numbers give you the resulting emission. So an auditor can really follow the logic of the calculation. So both on activity data and calculation, as well as on emission factors. Accessibility, so how does it work in practice? So we do have some use cases where one of the consultants using Carbon+Alt+Delete did a corporate carbon footprint calculation for a company, and that company went through third-party assurance. Both limited assurance for a company that had to report under wave 1 of CSRD, but also as part of a voluntary assurance for an ISO verification. So how does it work in practice? Typically, the first step is that you share with an auditor an automatically generated report from Carbon+Alt+Delete. So you see here in the content table of contents that all the basic information of the carbon footprint is in there, even an assumption on all the methodological details, what global warming potentials have been used. So all the information that is required for an auditor to understand what are the assumptions behind the data. But this is still higher level. So then in a second step, the auditor can get access to Carbon+Alt+Delete. Let me log in again. So what you see here is our platform. I have full edit access, but auditors can get temporary read-only access so that they cannot change the data, but read all the data. And then they, for instance, typically first look at the boundaries. So here you see a long list of the activity categories. And for instance, stationary combustion, what it is, why it is included in this case. All the information is in here. And then they typically do some sampling data where you have all the information in the inventory. So the inventory is the big greenhouse gas ledger. So let me take one very simple example, stationary combustion. They can zoom in on the details, see when the data was updated. So I just did the update 7 days ago. And then they see all the information on this data point, the volume data, so the 1,500 megawatt hours, the emission factor that was being used, the data range. If they scroll down, they also see the supporting documents. So in this case, an invoice was attached. If certain notes, assumptions were taken on this data point, it's in here. They see which emission factor was used from which data source, and so on, to really trace it back to the exact calculations that are being made. It's now a simple example, but if I, for instance, go to an example of the use phase, more to show the details of the greenhouse gas protocol, so bio emissions in the use phase. So if you burn, biopetrol, it still triggers direct emissions in your scope 3 in this example, 0.39. You can also see that it triggers a certain amount of bio CO2, so land-based emissions. You see the split direct emissions, combustions, life cycle emissions, the split here. In this case, both are reported, which is in line with the greenhouse gas protocol. And in this case, I'm also using an emission factor from the UK government. By the way, this full overview is also available in an Excel download, right? Because as Albert Jan pointed out, Excel is not a great tool to do the calculation, but sometimes it's still an easy tool where auditors can review the results. But we basically prefer to have the auditors also on the platform because all the information is in there, including the supporting documents. So that's in a nutshell what we do at Carbon+Alt+Delete to facilitate third-party assurance. With that, we come to the end of the webinar. As said, let's skip this Q&A. We already squeezed in some questions during the presentation. But before we wrap it up, maybe 2 more words on these type of webinars. So we're always very happy to have so many people joining the webinar. We do this on a recurring basis. So the next one is in 2 months from now, in June, on the topic of climate risk assessment. Also a topic that we at Carbon+Delete are working on. So to go beyond the actual carbon footprint, but also look at physical and transition risks linked to climate change. So we're working on that. We will have an expert joining the call talking about physical climate risks. So feel free to already register for this webinar. We'll put the link in the chat. And then I would also like to invite you to join our carbon expert community, which is basically a Q&A forum for carbon experts. We all struggle with the same questions. Some of us do have answers, but sometimes the answers are not very obvious. So with this Q&A forum, we connect people with questions, with people who might have an opinion or an answer to those questions. So also feel free to join this online community. With this, we will send around the slides. We will send around the contact details of the speakers. So don't hesitate to reach out to them for follow-up questions, content-wise, or if you need our services or their services. And with that, I hope you have learned a lot during this webinar. thanks a lot for joining. Thanks a lot for your questions in the chat, and hope to see you on one of our next webinars. Thank you.